Hi everyone. Cathy Woods bought 9 million worth of tumbling tech stocks amid the tariff sell-off in the last 4 to 5 days. Well, in this video I'm going to share with you what I did exactly similar to her, except that I didn't buy 9 million, I bought close to 3 million, to be exact 2.5 million, about one third of what Cathy Woods actually bought in this sell-off in tech stocks in our favorite luxury stocks in this video. First and foremost, why do I actually buy it? Well, you will be thinking I'm crazy, right? I mean that even if tariffs, whether it's negotiated, reciprocal, may take a while, earnings will be hit in the longer term. Well, I'm going to share with you the reasons why I actually do it. Well, partly based on my experience and partly because of the financial prowess and the power that we have made able to garden because of astute preparation. First and foremost, we like to buy when there is blood on the streets. Yes, ladies and gentlemen, you have heard this said many a times, rhetoric by many commentators. But the thing is that to be able to practice it is another thing altogether. Now, ladies and gentlemen, buy when there's blood on the street. Something is our mantra. Way back, in my experience when I actually bought Citibank during the global financial crisis below $1, as well as basically something that we've been saying all these years, even in our press interview. Now, it all started, as of last Thursday, when I've actually mentioned in my last video, as to basically Trump properly presented the greatest April Fool's joke, telling us basically how tariffs are being calculated. For more of that, do look at my last video. Now, what happened, is that subsequently, yes, there was sell-off on Thursday and Friday, but come Monday this week, that is actually just 3 days ago, we are already seeing incipient signs of something that the market is telling us. Yes, ladies and gentlemen, at GCP Global, we teach you and share with you our GCP Global investors. We are made up of fund managers, family offices, and high net worth individuals. Incipient signs of what the market is telling us, not what we forecast. No, we look at evidential proof that the market presents themselves. And one of the key things, ladies and gentlemen, was that this happened in 10:15 a.m. When one of Trump's official was misquoted to say that, tariffs will be delayed. Straight away in that 3 minutes from 10:15 to 10:18, you can see that the market wipe out sharply, only to be wiped down, within a matter of minutes. I think basically what it's telling us is that the market's edging for a strong bounce back, if a bounce back do come. Then come second, that's Tuesday and Wednesday, you are seeing already some incipient signs of crackling in the treasury market and credit market. Now, ladies and gentlemen, when bonds have been sold off in the US market, as you have seen in the last 2 days, which sent the bond yield from less than 4% to as high as 4.5%. It is actually a sign that either the Chinese are selling, the institutions are selling, so the earlier proposition when there is trouble, in 1929 depression, something that we always teach, ladies and gentlemen, in our classes is to prepare our investors for eventualities before the events actually happen, not after the event has happened. Now, since our last class in February, for example, in March, I have already been starting to sell a lot of REITs because we have been telling and sharing in our classes that real estate investment trusts in Singapore, particularly the likes of Maple 3 Logistics Trust, don't deserve, our investors' rating simply because they have been the same animal spirit as they have been since IPO. That is actually them just buying assets, irrespective of credit conditions. And that is where it put themselves in a shooting foot. Granted that it is relatively well managed under Maple 3, but it has severely underperformed. And what did I do, ladies and gentlemen? In the beginning of March, as you can see over here, I actually sold that, well, to be exact, 12th of March, I sold a total of 116,000 shares in MLT, raising almost 150,000. Then the next day, on 13th of March, I sold another 39,000 at 129. That's to raise 51,000. Now you see my sell price is 129, is almost 30 cents above the price as of yesterday, Wednesday. Now, then if you move further, that's on the 20th of March, I continue to sell. Yes, it's a relentless sell. I sold 75,131, raising 98,000. And then towards, well, even up to last week, on 1st of April, I sold 37,000 MLT, that's raising 50,000. You can see my sell price 133 is almost 30% higher than the share price as of yesterday. Yes, just 1 week difference, ladies and gentlemen. So to be able to sell at the highest price is what we teach in our classes. In total, you can see, ladies and gentlemen, throughout March, I've been selling MLT and I raised close to $1 million. Now, so if anything, ladies and gentlemen, in our classes, we actually try to tell you something that's pretty obvious, which sometimes may not be too obvious to the market. Take, for example, this chart, ladies and gentlemen. In our classes, we actually shared that, hey, it is for sure that China will retaliate if US actually tries to slap unreasonable tariffs on China, which is what we've been saying. Well, that's because the facts say so. Well, unlike Trump first tariff way back in 2017, you can see from the blue box, okay, the US, accounts for 19% of China's export. That's almost one fifth. Now, the US only represents about one sixth of China's export. And it may or may not come as a fact and a surprise to many of you that the Asian region, which is made up of Malaysia, Thailand, Singapore, Vietnam, and so forth, actually accounts for a greater amount of China's exports than the US. So for sure, China has less to lose. Basically, they will retaliate. And true enough, they did retaliate. And so as you can see, ladies and gentlemen, in our classes, we actually share with you grounded facts which maybe have been missed by the market, for which conclusions are important in times like this. So if you want to be updated on this kind of key momentous events, do actually sign up for our next class on 17th of May, for which the early bird special is still ongoing. So what else did I sell, ladies and gentlemen? Well, I continue to sell Fraser Centerpoint Trust. That was on 11th of March, where I raised almost 200,000. Then on the 1st of April, I also sold Capital Land Ascenders REIT as it surged towards the 280, 275 range. I sold actually 19,000, raising $51,000. And you can see yesterday's Ascend Capital and Ascenders REIT price at 240. Yeah, I've sold almost 20% higher in just 1 week. Yes, and then last but not least, Capital Land ICT. Well, it's actually one of the most favorite REIT that we have in our portfolio. I continue to sell it, raising almost 100,000 closer to the price of 220, simply because of price action. When things actually goes up too much too fast in a short period of time, you should always be taking profit. Similarly, like right now, when things are falling down so sharply, in too short a time, essentially you should be taking the opportunity to be buying in. So let's come to the rationale now of basically why am I doing this? I've sold, timing is correct. I raised almost $3 million, one third of what Cathy Wood actually did in deploying that. So how did I deploy my cash back? First, I actually added to my core holding. Yes, you can see, ladies and gentlemen, Hermes. For those who have been following us, you notice that Hermes has been our core holding since 2009. I've traded in and out, and basically one of my core holdings. I I first bought it below 200 euro. So in my 17 years following the stock, ladies and gentlemen, this time around, Hermes dropped from 2943 down to below 2002. How can you not buy when it's almost 50% drop in 2.5 weeks? And that's why I actually bought and continue to buy if the price continued to stay low. The other stock that I actually went in, something that I have not bought for a long, long time is Apple. Okay, yes, ladies and gentlemen, Apple in the last 4 days have never been more rate than I've seen it in all my years. You can see in this chart, ladies and gentlemen, Apple lost 23% in value in price in just 4 trading days. Yes, the last time when Apple lost that much was when it went down 22%. But it took almost a month for Apple to fall 22% during the COVID-19 crisis in 2020. So therein that presents the opportunity. So ladies and gentlemen, as you can see, we always prepare our students to actually think in advance and sell in advance. And that's why I was able to raise 3 million worth of firepower and ammunition. And right now, when conditions are so bad, do understand that markets are always a forward-looking mechanism. Take, for example, this chart. The S&P actually bottomed 13 months before earnings per share start to drop, during the COVID-19 period. So yes, tariffs, reciprocal tariffs, or punitive tariffs may actually cause EPS of companies to shrink going ahead. You know, to what extent will they shrink? I don't know. And to how long will they even shrink? I don't even know. But I do know that markets being a forward-looking mechanism, when prices drop that much and there's blood on the streets, literally put it into action, as what we always teach as UCB Global Investment classes. Till next week, then, and enjoy your week doing market bottling. If not, do sign up for our class on May 17th, where we share with you more precious and momentous changes.